Thank you for everyone for joining. The third of the series of Meet the Analyst. Edison's really keen to continue doing these with the ShareSoc and encourage you to keep passing on topics to Pavlina and Mike for future sessions. It's always helpful for us to understand the kind of things that you're interested in. This was on the list of things that you previously asked, so we got this positioned for this sunny day in March. Delighted to be joined today by two members of our tech team, Dan Ridsdale, who heads up the team, and Neil Steer. I will let them introduce themselves individually. Dan, I'll start with you. Maybe just give people a quick background to yourself and also just an overview of the Edison-Tech franchise.
Thank you, Neil. Yes, Dan Ridsdale. So I head up the tech team at Edison. Been at Edison coming up for 15 years. Prior to that, was on the sell side, firms such as Baird, Tethers, Bridgewell, Nomura. Prior to that, I was actually a market analyst, technology and telecoms analyst at Ovum, and started my career in software development, developing large telecom software systems. In terms of the technology franchise at Edison, we are international business. We cover companies across UK, Western Europe, Asia Pacific, and the US, mainly looking at small caps, but some larger ones, but really looking across the technology spectrum, and that gives us really nice insights into what is happening, particularly with the with the smaller players. And in terms of artificial intelligence, we cover companies who are involved in the thematic from the infrastructure level, so data center companies such as Northern Data, software implementers, high performance computing companies, and also people who work with the data as well as the broader software sector as well. So that's the team. We've got 5 analysts, each of us with well over 20 years experience, and probably on average closer to 30, and Neil is one of those.
And Neil, maybe you want to just give people a quick intro to yourself as well.
Yeah, thanks, Neil. So Neil Steer, I've been a sell-side equity analyst for 32 years. And pretty much exclusively over that period of time, I've concentrated on technology companies, both European and North American listed companies. I've worked at a number of the larger firms, Kleinwort Benson, HSBC, Warburg's, UBS Warburg, and more recently Redburn Partners. And in that 32-year period, tended to focus more on the software and the IT side of the European and the North American quoted technology companies.
Thanks. And just to sort of add to that, I think between all of us, we've all seen cycles happen before. We've seen how they play out. We see how the similarities, but also the differences. And this one is, I think, possibly the largest, most significant one we've seen. Each one builds on the shoulders of the previous ones, certainly happening a lot quicker. But there are lots of learnings from previous cycles that we also need to bear in mind.
Thank you. And that's a good place to start, Dan. Maybe we just start with a sort of big picture, effectively, in terms of, in your mind, how have you seen artificial intelligence evolve? It seems to have come on really quickly over the last 2 years or so. And what are you hearing of the impact, particularly on growth? We're in an environment where everyone's looking at productivity growth and finding ways of improving that. I'd love to get a sort of grassroots view of what you believe that is looking like.
Yeah, sure. I mean, the first thing to mention is that AI has been going for a long, long time, and for many years it was sort of seen as this thing that is always about to happen and never really does. Things like machine learning, things autonomy was doing. Even AI in itself is not a new thing. Obviously, what has happened recently is we've had this explosion in generative AI, really since the launch of ChatGPT back in November 2022. And that suddenly exploded AI into everyone's consciousness and really little views under the market. And obviously since then, we've seen very, very significant swings in value for companies. So, obviously Nvidia is the poster child, but the Magnificent Seven, have all performed well. And if you look at charts of companies who in similar sectors, for example, if you look at the chart of Intel versus Nvidia, you can see how not being exposed to the future growth trend completely, you're seeing a phase of disruptive innovation essentially. I think in terms of GDP impact, and Neil, do chip in. I think it's really yet to come. We're seeing swings in valuation. Some companies do well, but we're not, and we're seeing some spectacular growth at the semis and infrastructure level. But we're not really seeing yet any significant impact on GDP as a whole.
Yeah, I would absolutely agree with that. In fact, speaking to investors recently, one of the things that that I think we have to bear in mind is that it is still fairly early days, and I think of AI really in sort of 4 buckets in terms of how it could impact the market. The first bucket, very simplistically, is it's areas of the market where AI will have no impact, and there are clearly many parts of the market where it's just not relevant. The second area is things where we currently do things, or industry currently does things, and AI can change its efficiency. Clearly, there are examples that we've already seen, and the point that you made there, Dan, I think is very pertinent, which is actually artificial intelligence has been around, and some of the early areas where it can be applied to improve efficiency, like machine learning, those have been in operation and used by industry for 10, 15 years already. The next area is areas where we can't do things at the moment, but AI means that we can do things. And this is rather interesting, actually, because by its very nature, it's almost impossible today to think of those things. And I don't think actually there are an awful lot of things today. It's almost like the unknown unknowns. There are things that artificial intelligence may be able to help us with do in the future that we can't do at the moment, but I can't think of many which are truly transformational. And then the fourth bucket is an area where AI just simply can't have a role at all. And that's in any of the areas where some kind of moral decision-making or moral judgment is required in the decision-making process. And of course, you have to completely take AI out of the equation for that as well. So that brings us really back to the second bucket. And the second bucket, things that we do at the moment that we can do more efficiently, well, AI has already been in that marketplace and operating for a period of years already. So the generative AI is very interesting because it can take control and create things quite clearly, but it's still just doing exactly as we've done before, but more efficiently. So it's another layer of efficiency on areas where we've been using artificial intelligence already, if you see what I mean.
Thanks, Neil. And so, I mean, to bring a conclusion to that, I have seen a range of different projections in terms of the impact of AI on GDP. That this is going to add 50 basis points to long-term GDP. It sounds like you're a little bit more skeptical about that, or that the timelines around that are longer. I mean, what's your view in terms of how realistic should we see this as something that is going to transform our sort of productivity and sort of GDP? And in your mind, what could either sort of accelerate or hinder that?
It's a very interesting question. We've got used to this sort of mantra that every technology cycle always creates a new wave of growth. I do think it's dangerous to just assume that is always the case. Just because things happened in the past doesn't necessarily mean it will happen again. To an extent, economist forecasts are always wrong. Certainly, there are great opportunities, but equally there are risks as well that we're more aware of. And I guess the biggest risk factor, one of the biggest risk factors is that AI sort of exacerbates the imbalance of wealth. I mean, ultimately, the economy needs people to be spending, and if an increasingly large proportion of the population, sort of white collar workers, are seeing pressure on salaries or their jobs, then that reduces spending power. So I think it's too early to say in terms of the economic impact. And the other factor about artificial intelligence is the whole world is educating themselves on this already, all at once. So all you need is connectivity. So we're now competing in a global marketplace, and possibly for global GDP growth is good, but it is leveling the playing field in terms of skills, expertise. People with the largest, most educated, brightest workforces will probably do best out of all of this. So we've really got to bear that in mind in terms of in terms of GDP growth, and I think there is a risk that if European countries don't move fast enough, then they could be below the curve rather than above it.
Yeah, I think of it at a very high level as very analogous to what we saw in the early days of the computing and the personal computing industry, which is personal productivity and business productivity steps up a gear, but the full consequence and result of that is not something that's seen over a very condensed period of time. It's actually seen over a sort of a decade to 2 decades worth of time as it becomes gradually more pervasive. So it's and that comes back to Dan's point about some of the valuations and some of the share price movements we've seen. There's absolutely no doubt that some of the early almost euphoria in artificial intelligence is perhaps a little bit overdone in some areas of the market.
Okay. And what are things that people should look out for that might either accelerate or hinder effectively this progress? So in particular, I'm thinking about the DeepSeek moment where suddenly the cost of this comes down significantly and it becomes more available to people. What are the things that you're looking for in terms of either things that will accelerate or hinder the AI development?
So before we sort of address that issue, I was a very timely question actually there, Neil, because I was at a conference this morning where the view or the data that DeepSeek has reduced the cost of AI to 100th of its previous levels. That myth was actually very carefully dismantled by a couple of analysts who have actually gone in and looked at the data behind the DeepSeek data, as it were. And when you look at there are 5 different areas of how the DeepSeek modeling, both the training of the algorithms and the data sets that they were working with, the computing power that's used, and so forth, and the actual cost advantage was nothing like the 100th or 1% of the OpenAI costs. It was less, but it was not less by an order of magnitude of that level. So I think once again, it comes back to this concept of there's a lot of sort of almost euphoria in AI and the cost of it coming down. It certainly has come down a little bit, but it's nothing like the level that you saw in that sort of 1% of the OpenAI costs that was the headline figure that DeepSeek put in.
I think what DeepSeek has done though is challenged the view that AI infrastructure is going to be dominated by this NVIDIA brute force AI, brute force NVIDIA, US domiciled hegemony, if you like.
Yeah.
It has shown us that there are more ways of doing this. The chip environment will probably be more diverse than we thought. NVIDIA is still going to be a huge player. It's still going to be the leading player, but there will be other architectures, and and Amazon and Apple and the hyperscalers are all developing their own chip architectures, right? Broadcom's right in the middle of that, working with them on that. And the chip landscape needs to be more diverse. The whole industry is uncomfortable about the dominance of NVIDIA. So it has shown that it will be a more diverse landscape than we probably thought, which is, I think, a good thing for European equities.
Okay, and I guess that brings us neatly into anticipating growing demand leads to growing demand for computing power, AI computing power. How do you see the sort of competitive landscape evolving around chip manufacturers and cloud providers? And possibly at time, one of the questions that's already sort of been raised within this is what role does quantum computing effectively play in this, and how quickly do you think that that's going to be operational?
In terms of demand for data centers, you know, is well recognized that, you know, the data center demand is going up very, very significantly. I wouldn't say exponentially, but hugely. And you've got a lot of obviously tangential plays on that in terms of, you know, connectivity, power, clean energy, and so on. We are seeing demand, and people who we cover a company called Northern Data, who provides independent NVIDIA-based high-performance computing, and they are seeing there is demand for independent architecture outside of the hyperscalers. So there will be, you know, to an extent in the short term, it's a little bit rising tide lifts all ships. What always happens is you go through, in any of these cycles, you go through phases where you're capacity constrained, and then people overbuild, and then probably for a while you will have overcapacity, and it's hard to work out when we reach that point, particularly when, okay, DeepSeek isn't providing the step change in benefit, but when the equation of computing capacity versus data set capacity is changing so much. So yes, so there will be ongoing demand, and I think there are ways of playing AI in terms of access to the data center ecosystem that, you know, they're well recognized, but those companies should continue to benefit from that trend. When we reach that point where we go from you know, be capacity constrained to overcapacity, I don't suspect in this next couple of years, but at some stage that will happen.
Yeah, and when it happens, of course, the big thing to watch out for there is more the pricing movement, because you'll have a very marked correction in the price of computing on the market, and that's really what's going to be the challenge for the data center investors.
Yeah, and on the cloud side, is this something that you think is going to be evolved with AI? You know,
sorry, quantum.
Well, no, sorry, I was going to talk about the sort of cloud providers and indeed, you know, quantum computing, how that sort of fits into this.
Well, I mean, AI is happening in the cloud, essentially. You know, the Gen AI is in the cloud, and the same, you know, the dominant providers of you know, cloud computing, the AWSs, the Googles, and so on, will probably be they will be the dominant providers of AI capacity as well. There will be other providers outside of that, but you know, when Amazon and then Google and so on sort of launched their cloud strategies, you know, a lot of people criticized at the time for being low margin, but you know, the stakes on this were huge, because they were, you know, through launching their services, they were capturing you know, they were creating the computing platform of the future, essentially. So, you know, they built the platform for SaaS, and now they're building the platform for artificial intelligence. And I don't think anything's really going to change that significantly. And that's why you've seen, you know, the ratings and the valuations and the demand for those services go up.
Okay. And is quantum computing now, you know, it's something similar to AI that's been talked about for a long time, not quite a reality, but seems to be making headway. On your horizon, what you know, where do you see that making a step change in this?
It seems to be happening faster than people thought a year ago. We're seeing some advances, and again, you know, there are diverse technology providers and so on, but again, it is the big tech companies who are putting the most R&D into that and have the most infrastructure to leverage to benefit from that. I think I saw a chart a little while ago saying, you know, it was, in terms of R&D spend, you know, the Magnificent Seven sort of spend 40% of the S&P's CapEx of R&D spend is made by those 7 players. So there's a huge amount of R&D and development going into that, and quantum computing is part of that. So and it is already being used for very niche tasks. So it will unquestionably become a factor. It is being used already. What it means for stocks and shares, I don't really know yet. It creates huge challenges for cybersecurity and things like that in terms of encryption. but it is currently being used in very niche scenarios.
I can't remember the standards, but I think one of the challenges that quantum computing has to get over, if you like, before we see it really gather momentum, is that you've got 6 or 7 different companies, and the commonality of technical standards in quantum computing is really not homogeneous and agreed, and therefore it's a little bit like the RISC versus CISC process you had in the semiconductor industry many years ago. Different companies following different routes, and it's not really until the market agrees a common standard that I think you'll actually start to see quantum computing really take off, and that looks as though it's quite a few years away from where we are at the moment.
Or it happens in closed loops, right?
Yes.
With the hyperscalers.
Yeah. Okay. Well, let's take the hypothesis that this will continue. This is continuing. It's going to continue at pace. It ties into a question that's come in, but also I guess I wanted to understand how it impacts everyday enterprises. So how are traditional enterprises overcoming the challenge of integrating AI within their existing systems? And one of the questions that sort of came in says that all verticals will be impacted by AI and none will be left unchanged. Neil, I think you've got you've already started with your 4-bucket view about this. But the question was, which verticals do you think are going to be positively impacted, and do you have any practical examples of companies that are doing this and investable? And I can certainly think of a couple. But let's start with let's start by unpicking this, and I should just use this opportunity to let the audience know that normally we try and accompany these presentations with a longer report that people can dive into. Neil actually produced us a mind map of the AI space, which led us down so many different avenues that we're still working on it, but it will come out, and I'm sure that the Mike and the team will flag it to you when it does come out. But Neil, if I can bring you into the sort of conversation in terms of how are traditional enterprises starting to integrate this, and maybe you started with your sort of 4 buckets, maybe provide a little bit more color around that.
I mean, I tried to think about the list of industries where I think that artificial intelligence is really going to improve the productivity. And there are a number of areas. I mean, in the medical industry is probably a good example in terms of processing data and looking at image recognition for diagnosis, and looking at how AI can enhance the speed of drug development and so forth. Perhaps that's probably one of the best sort of efficiency-driven improvements that I could think of. There have been quite a lot of reports written about how AI is almost going to become a sort of a 7th stroke 8th software programming language, and effectively artificial intelligence can generate software code and computer code to replace that process. Rather interestingly, I was just reading a paper a few days ago about how AI was used to develop, AI was used to generate code for a Pac-Man game. So this is sort of right at the very cutting edge. Can you get something? The Pac-Man code as a game is available, and it's actually it's already part of the open AI database. But when ChatGPT was used to generate Pac-Man code, the quality of the code was actually so bad that the number of hours required to debug the code meant that the total time saving actually wasn't that good. So every time you dig into an area where you think artificial intelligence is going to improve efficiency, it's almost as though you seem to be gaining on one side at the moment, but losing on the other part of the equation. To answer your question, it's actually very different, other than going back to traditional artificial intelligence, machine learning, automated decision-making processes. It's actually rather difficult to see where it's going to truly transform business processes and businesses as we see them today. It's just that is the case, really.
Okay.
I think I'm slightly more. Sort of the disruptive point of view. I think I think it's interesting. The companies who are exposed, software companies who are exposed to AI, aren't necessarily actually showing the benefits in terms of their financial performance right now. And you know, there is a little bit like the transition to SaaS. There's probably a bridge whereby companies have to invest first and adapt their business models. Okay, the code isn't probably up to scratch with the top developer right now, but I think it's improving quickly. And there are companies like, you know, for example, Pegasystems in the US who are very much focused on using AI to automate workflows and to rapidly take, you know, workflows and you know, to make them much more efficient. But I think we are currently lacking really a number of standard adoption models for AI. There, you know, there are integrators, there are software companies, and so on. But a lot of companies don't really know what the AI deployment structure or sequence of things should be. But equally, it will, you know, it will certainly disrupt some industries a lot. The creative industries, for example, you know, the ability to create logos, graphics, and so on. Gets much quicker. We cover a company called Freelancer, who have a network of hundreds of millions of freelancers, mainly in India and so on. And people use them for small coding tasks, graphic design, and so on. They've always given, you know, they've always said you know, you get a freelancer in India for about 1/7 of the cost, but this platform is now training all of those freelancers. They're giving these freelancers training on all of the AI tools. So they're saying, right, you're getting a 1/7 of the cost from offshoring it, and then you're getting a, you know, similar cost off from using AI. So all of a sudden, you know, the depreciation effect of this is, you know, 50 times or something. So, you know, there are areas where it's going to be significantly depreciationary, if that's a word. And actually, they're involving the tasks that you can use that platform are getting much more complex. So, you know, you can go in and deploy a chatbot on your website, but now they're even starting functionality to start your own company using freelancers. And I think, to your point, Neil, that we don't know where it's going to disrupt.
Yeah.
There will be companies that emerge with a new model very quickly that we just don't see coming. And our head of marketing, who's deeply involved in AI, believes that there will be a one-person unicorn within 10 years, probably sooner, because of that. You know, because of that effect, the fact that you can disintermediate so much of the task.
I think one of the areas where you definitely will see a change, and we saw this really as we went through sort of the latter part of the 1990s and the early noughties, is that if you look at the likes of, you know, the Capgeminis, the Accentures of this world, they basically spend their lives teaching customers, large industry, how they can use new technology. And what's likely to happen is that artificial intelligence is going to provide an extra growth leg to the role and the services that are provided by the integrators and the likes of Cap, Accenture, and so forth. And what I think you're going to see is you're going to see another wave of small, very nimble, fast-growing service agencies delivering those services to customers. And really, on the coattails of the Caps and the Accentures, you're going to see another cottage industry, another wave of specialist AI service companies come through, who then teach the end user how they use this technology to be disruptive or to change their industry. And this is rather interesting, actually, because typically what you find in the services marketplace is you'll find for every 10 of those newcomers to the marketplace, 4 or 5 of them will probably drift away and their business model will fail over the passage of time, but 2 or 3 of them will survive and they'll become new players and threats to the likes of Cap and Accenture. And essentially, they will be acquired by the big IT services companies in the future. So we're going to see another proliferation at the smaller level of service providers in this marketplace.
Yeah, and we cover some of these companies, and some of them, you know, a year ago they looked very, you know, very tenuous, very speculative, but some of them are actually showing pretty good results, actually. So you can see that starting to happen already.
And I mean, to give the question asked, is there a sort of practical? Can you give a sort of you know, an example? there is an interview on the Edison website from Polar Capital, who who pivoted quite a lot of their investments into AI enabled, either directly AI enablers or AI enabled industries. And they bought into Relics on the back of actually seeing them at the NVIDIA conferences, starting to understand that Relics was transforming itself from a publishing business into an AI enabled business. And so, a legal professional, rather than leafing through a LexisNexis, can now go on and ask the right kind of questions, and they've trained their large language models. And that is an example of a business which has completely transformed itself, utilizing this. So that it's an example of, you will see enterprises which are able to adapt themselves. And I think I read somewhere that Relics now has something in the region of 11,000 software developers sitting within its business now, which is completely different to what it used to be as a sort of publishing business.
Yeah, and I think you are seeing the companies who've been early, and they're adopting AI now. But what these companies were good at early was grasping data early.
Yeah.
It's the companies who really got their head around data early, and the key building blocks that enable you to make that sort of transition, a cloud platform, getting your platform in shape so all your data is in the right place. The best placed companies would have made that migration to cloud and SaaS early. They would have had good grasp of their data disciplines and been talking about data for a long period of time. And now those players are best placed to leverage AI. So there's a company called Verisk in the US, which has increased tenfold. Similar story, being data for the insurance industry, very early on that trend, and now performing very, very well. And there are instances in other instances in the UK that companies are on that trend, but I think the most innovative the companies are best placed to benefit from AI are the people who've been investing into data and cloud, their cloud platforms early. They're just much better placed to make that transition.
And moving it on, in terms of emerging business models enabled by a consumer AI, is there anything that excites you from an investment perspective? And I can certainly share a perspective of what I heard about Tesco, but let's start with you in terms of, is there any consumer AI technologies that you think actually that is potentially transformative?
I mean, the games industry is an area where AI is going to impact profoundly, and you're always seeing small apps using AI coming in and being very popular. But the fact is that development cost you can reduce enormously, but also you can now really change the way games work, make them more interactive, make them sort of invent themselves as you go along. So in terms of consumer trends, that's one where there will be, and disruption and innovation happens very quickly in that industry. So I do expect that will be an area where, a little bit like when Fortnite came along and just suddenly exploded, or I wouldn't be surprised or be astonished if a game that really leverages and uses AI doesn't explode and get huge mass adoption in the next year or so.
Yeah,
I agree. I think it'll be gaming. Just going back, funnily enough, Neil, to one of the earlier questions you asked, examples of where it has actually transformed a market. I remember, I think it was Mark Benioff at Salesforce. They've obviously been investing in artificial intelligence for a number of years, and one of the solutions that they'd come up with was for a claims and insurance or a claims management sort of front end system, and the degree to which they could refine the natural language processing was such that when an operator was actually on the phone taking a phone call from a customer, the talk or the conversation was actually being converted into text real time, and then the system could actually detect that the customer's calling and asking a specific inquiry about a document they'd signed as an insurance document several years previously, and then the system can be automated to go and retrieve the document and present it, and effectively present it on the screen of the call center operator, so that they had it right in front of them to answer the questions in real time to the person that was calling in. So this is really an example of where it's dramatically changed the efficiency, and the operator doesn't have to say to the customer that's calling in, I don't know, I'll call you back in 3 hours time when I've chased up the paperwork. So it's there are lots of examples where it's added to the efficiency like that, but it's really driven by the automation aspect of what the NLP can deliver.
Yeah, and interesting. I mean, we had a speaker on talking about AI's impact on retail, and large retail organizations do use AI in the back end, and this is about optimizing deliveries and doing that in the most efficient way and making sure that they're ordering the right amounts. But increasingly, it's now being used in the front end so that you can come onto the online website. It will very quickly profile you in terms of the type of customer you are, and as a result, your page 2 and page 3 are much more relevant, and it's leading to 40-50% increases in amounts going into baskets as a result of it. So correctly harnessed, I think, will lead to better results on the consumer side.
But that's interesting, Neil, because those systems, those planning and optimization systems, Oracle, SAP, and specialist content management companies, once again, it's artificial intelligence, but it's perhaps not really using generative AI in the same way that we can do now. And it's when generative AI starts to really sort of overlay that you start to see a massive uptick in efficiency.
Okay. I'm conscious of time, so there's a few more things in terms of covering off the AI space. For investors new to the AI sector, what are the sort of key metrics they should focus on when evaluating AI companies? And we're talking about very different spheres. And how do you assess the sustainability of competitive advantage in this very rapidly evolving industry?
Yeah, I mean, it's hugely diverse, because I mean, AI will touch most elements of companies, and that equation is very different. In the hardware side, that's a rapidly moving space. In terms of software, and we haven't really talked much about software companies, but software is that key intermediary level, and there is this debate that AI eats software, or actually people are saying AI eats SaaS. But I think AI may eat SaaS, but it's going to eat legacy software a lot quicker. So in terms of key metrics for a software company, for a technology company, to the points I talked about earlier, you need to look at which companies have been early in terms of the adoption curve, in terms of SaaS platform. Having good data, the ability to having good data, but having rock solid means of collecting new data, new value added data. So that will be very important, and often that comes from having deep domain expertise. So I think one really interesting area is vertical AI. So for software companies, having deep vertical expertise in a specific area, good client relationships, ability to collect data, those companies can potentially do very well. And we've already seen that with, for example, there's a company called Windward, which was taken out late last year. It was a marine intelligence company, had built their cloud platform, had great data, were on the forefront of using artificial intelligence, and they were rewarded, if you like, by a takeover. So I'd be looking for companies who for a long time have been on the forefront of modernizing their platforms, using their data, but also have that deep domain expertise that creates a moat, a competitive moat to keep the generalists away.
Okay. I'll try and wrap up and try and bring it into some of the outstanding questions, but I do want to try to give time to the questions that have been asked. So snappy answers, I guess, to the following. In terms of regulatory developments, what kind of things that should we be aware of that's most going to impact the industry or the investor?
I was at a conference today. Regulation moves slow, AI moves quickly. That's the fundamental dilemma, and it's very hard to.
Yeah.
Like, it's very hard to keep up. And actually, now from the US, we're getting a deregulating environment.
Yeah.
You know, and to an extent, we're seeing sort of almost thrival of the loosest. Term up, but you know, ChatGPT burst to the fore. I mean, Google have been working a lot of this stuff for a long period of time, but ChatGPT just put it out in the open, and suddenly you saw huge value creation. And there is what we've got to be wary of is people actually getting a competitive advantage from being too loose and not having AI governance structures and so on. There is regulation out there, but I wouldn't be highlighting any one particular piece because it's a moving feast. And actually from the US, which is dominating the landscape right now, we seem to be in a deregulating environment rather than the other way.
I was reading the European Parliament. I think it was in 2023. They put out a sort of a rubric of regulation, and I think the UK is planning to do something later on this year. But it's all very basic stuff, and it's, as you would expect, it's all about transparency. So people having to declare, you know, content is generated through AI and so forth. And obviously, there are various caveats, but in most of the European regulation that you know, you can't. The type of generative content that can be created and put into the public domain, as you can expect, is all the normal caveat there.
Yeah, and then
AI governance is going to become a bigger factor there, especially for B2B. You know, in consumer, people can go off to TikTok and all of these services, but if companies buy from companies, they need to know that their AI governance is good, their data is good. So that's where you're going to see more of a focus in terms of governance, regulation, and so on.
Yeah. And funnily enough, just to add to that, the conference I was at this morning was actually being hosted by a law firm in conjunction with an insurance company. So it just has massive implications for how law firms and insurance companies work together to effectively protect their clients and underwrite the risks of this.
Yeah. Okay. And similar, given how fast it's moving, and Dan, I think you touched on this with the freelancer example. How should people think about the AI talent shortage, and how do you think leading companies are sort of dealing with it in terms of addressing the issue?
It's a big factor. I think particularly there's a risk with that Europe struggles more because the inability to pay up for top engineers, and because of there's a sort of two-tier. You're seeing a bifurcation essentially in terms of skills. Really top end skills are in very short supply, and then you've got democratization of skills that people are using at the lower level. So you know, at the top end, engineers are going to be paid very highly, and that's going to be a challenge, and it's going to be a challenge for companies who don't have the budgets to pay those people.
Yeah, and I'd just add a comment to that, which is that traditionally IT service companies and software companies, but particularly the service companies, are very good, at training people. And in fact, you know, the likes of CAP, Accenture, Tata, Wipro, etc., they're actually more IT universities than anything else. And I think in the same way that we saw an offshoring trend for classic IT services, I think this probably means that the offshoring revolution is going to probably extend a little bit further. And Dan's comment about wages, absolutely spot on, but it's all about relative wages. And the fact is, you can relatively pay someone very well to be based in India, but they're still likely to be a hell of a lot cheaper than if they were based in North America or Europe. And so I think this is just going to reinforce and cause the offshoring trend to perhaps continue for a little bit further than people are anticipating.
And just a general point, I think governments realise this, but we've really got to accelerate our education system and training these people up. That's going to be a huge differentiating factor, and you know, at the governmental level, that's something that really needs to move much more quickly.
Excellent. I have tried to answer some of the questions as they were coming in, but there are some that are outstanding. So let's just turn to some of them. It looks AI looks like it is a utility, and its value would be in the apps and integrations where it can help. Is AI a utility like electricity? Is that a good way of thinking about it?
It's a hybrid. I mean, people often say sort of data is the new oil and AI is a utility. They said the same thing about cloud computing when that was emerging, and to an extent it is. Although right now they're leapfrogging each other in terms of what they can do and what they're good at, and I think that will continue for a certain period. But what happens with the hyperscalers is they add paid functionality and they add applications and so on, and they decommoditize their, you have the commodity layer, but they decommoditize their offering with value added solutions. So I don't think that the hyperscalers, so the Amazons and the Microsofts and so on, will be commoditized from this. They will find ways to get value out of it, although there is this land grab phase right now. The value in the applications, it is, but just bear in mind it becomes an awful lot quicker to write an application. So you need to have that, to the point we made earlier, you need to have the data. One of the big challenges for AI startups at the application level is getting access to the data. And this is one of the areas where more established companies really can sort of defend themselves, because actually startups need data. Established companies have the domain expertise, the customer relationships, and the data. So I'd expect to see takeovers of AI startups who try to get off the ground but don't manage to get the data to support their models. I think it's an oversimplification to say that the value goes to the applications, because it goes to the data rather than the processing or the application. It's the data that matters.
Okay. This question is, some fund managers class themselves as technology specialists, e.g. Allianz. Others might specialize, classify them as growth, Bailey Gifford. So in the current environment, what do you see in terms of pros and cons of those approaches, vis-a-vis sort of investment return? So, better off being a technology investor or a growth investor? We're talking to two technology analysts.
I think even if you look at Polar Capital, for example, obviously being a technology investor has been hugely positive, whilst Nvidia and so on going up. That's driven their performance. But even Nvidia's increased in value so much that somebody like Polar Capital, it was their largest holding, yet they were underweighted relative to their index because it's just got so big. And the reversal in fortunes of Nvidia has disrupted their short-term performance. They've been actively trying to diversify into smaller names and to names higher up the stack, so enablers and beneficiaries. And to the point about, are you growth or are you tech, the beneficiaries might not fall in the tech sector. And so Neil's talking about healthcare, you're talking about vertical companies with deep domain expertise and actually data. They can be spread across a number of different sectors, but they're not actually technology companies at the moment. So in a way, I'd probably err towards growth, because actually I think a lot of the beneficiaries will be the users, the beneficiaries at that beneficiary level from now on, and that investment remit gives you easier access to those companies.
Okay, great. Some models describe technology waves, software broadly as the fifth wave, and AI broadly as the sixth wave. I think you touched on this. Do you think software companies are necessarily past their peak importance, or do you actually think they're actually a source of compounding growth going forwards?
I personally think that software companies will ultimately end up embracing artificial intelligence and end up using it as one of the tools that they have. And I do still think that software code and applications will be required, whether it's ERP or whatever the application is. I still think that applications will be required, and ultimately artificial intelligence will be used as a tool by software developers.
Yeah, and it is, right. I mean, nearly every software company has got AI development.
Yeah.
So, but equally, developing new code becomes quicker and so on. So, you know, if you look at companies who've migrated from being software companies to cloud companies to AI companies, something like Microsoft, you know, they're still in a good position to dominate, or not dominate, to be one of the major players in artificial intelligence. I think it boils down to what we said. You know, legacy. AI will eat legacy software. It will increase the you know, the cannibalization of legacy software. Software companies, definitely, there will be many software companies who benefit from AI. They will be investing into it, and they will be the companies with the characteristics we mentioned, with data, who've been always on the innovative end of the curve, and on cloud platforms, and often deep domain expertise in a vertical area.
Okay. How do you think the sector is going to be impacted by the digital services tax? Is there going to be any positive impact at all? Tax generally is a bad thing. Do you see this as something that is going to help?
Possibly around the margins. I think there's such big structural changes at the moment going on that it sort of almost boils down to the modeling level, really. So yes, but I don't think it's the most important dynamic that we're looking at right now.
Okay. There's a question, and I'm not sure, I'm not an expert on this, so if you can duck it if you want. Should I sell my blockchain investments?
I'm going to duck that. We do the next one. Milosh, we've got a brilliant digital assets analyst, and
okay,
he would be the best place to advise.
David, we will defer your question, but we promise we will come back to that. There's a question about coming back to practical applications. So can we talk about some companies, and maybe it's a good way of sort of wrapping this up. Can we talk about some of the companies beyond FANG top 7 that are transforming industries with AI? We talked about Pegasus and RELX. Shall we each pick one for people to focus on in terms of industry leaders in their area, their niche, which you think are interesting?
Yeah, sort of industry leaders is interesting. I think there's a lot of interesting plays we're looking at. It's interesting that a lot of the companies that we look at in the small mid-cap space, who structurally look well placed to benefit from AI, are sort of going through those transition that transition pain, if you like. We were looking yesterday at a company called Altitude Software, who've got a really nice AI-enabled, so were you, Neil, actually, but the AI-enabled platform for CFOs.
It's the one I was going to think of. So
a very interesting play. It might be a useful time now, but adoption of this, because it's a new service, it's a new thing, is just taking time to take uptake is taking longer than they thought, and at the same time their sort of legacy businesses aren't, they're not particularly growing. I would look at companies that I think are interesting, who are maybe not. I think what's interesting in software space is that some companies aren't really given a premium for nice AI qualities. Alpha Financial Software is an interesting one. It's a business in the sort of asset leasing software space. As I said, nice vertical niche market, good platform on the forefront with AI. Even a company like Craneware, which is involved in the sort of healthcare software space in the US, has a lot of data, and is potentially in a really nice position to leverage that data, and it's making partnerships and having a sort of app store where they can plug in AI apps to enable those apps to use their data, so they can potentially benefit from that. And and then there are companies with sort of slightly different data formats. So we covered a company called One Spatial who specialize in geospatial data, which is earlier on the curve in terms of AI adoption. But one of the things about leveraging AI is you need to get your data into shape, and this company has a geospatial master data management solution which helps you get your geospatial data into the right shape, so then you can then deploy things like AI and put those things on top of them. So they're in a quite interesting position as well.
And my example that I would add into this, and when I talk to investors, quite a lot of focus on the London Stock Exchange, which, on the surface, for the, you would think of this as the exchange, it's where the issuers are, but, actually, once you dig into it, it's a completely different company. It's more Refinitiv. Dan alluded to the fact that data is critical. Refinitiv is, and, all the trading data that the London Stock Exchange have is a huge component of that. The Microsoft tie-up that they have, or the fact that Microsoft has taken a stake in them, is very interesting. I think the idea of this business, which is it's going to transform effectively financial services and democratize the access to that information. So you don't need an expensive Bloomberg terminal. You might have this kind of information integrated into Teams, integrated into your Excel, etc., on an ongoing basis. So there's a lot of people focused on that, where London Stock Exchange goes with that journey.
And in terms of ways to play AI, actually, we've got a growth conference coming up, but there aren't many ways in the UK market to get pure play AI exposure, but we do have good investors in AI. So obviously, there's people like Polar Capital, HG Capital, who you can get access to through the HG Capital Trust. They've been investing in SaaS businesses and converting businesses to SaaS businesses for many years, which we've said is a key success factor. And they've got an AI team who are helping all of their businesses deploy AI and really be the forefront of that. So, as an investor, that business has delivered fantastic returns, but they are sharp and they've got the right technology foundations in their portfolio companies to continue to benefit from that, I think. And then there are people like Molten Ventures, previously Draper Esprit, who at the earlier stage have been investing into digital artificial intelligence companies and so on. So I think it's also worthwhile looking at the innovative technology investors to get exposure to the theme on UK markets. The UK actually rates around about number 3 in the world in terms of AI innovation, AI investment, and so on. It's not coming through in listed markets yet, but there are ways to get exposure to that expertise through investment vehicles.
Well, that's been fascinating, guys. I've just noticed we've got past the 6 o'clock mark, so maybe we could. Sorry to interrupt, but I wanted to ask a question: is how can I train AI to make my investment decisions for me? But nobody's given me a clue on that one yet. But
it is happening. I can guarantee that. But
I'm sure it probably is. There'll be an app for it shortly, I'm sure. Save me a lot of time. But you alluded there, actually, I think it was you, Neil, or maybe Dan, that you've got a conference coming up, haven't you, in May, is it?
Yeah. I think
And is that going to cover AI as well in that conference?
One of the panels, and as with last time, we will make an invite to the conference available to ShareSoc members. So
excellent.
Look out for that, please.
Right. Yes. No. I look forward to that. Yeah. Fascinating. So I scribbled lots of notes. I've got to go away and kind of put a hot towel on my head, or is it a cold towel? I can never remember, and make some sense of all of that. But it is an exciting area. So thank you for sharing some of your market knowledge with us today, all of you. I hope that's been of help to the listeners. Certainly was to me. So I look forward to looking at it again when I get the recording back, so I can sort of remember a bit more of it.
Thank you, Mike.